Gold prices supported at $1,800 by G20 tensions, Chinese demand, recession threat. Gold prices held above what analysts called support at $1,800 per ounce on Monday, despite the US dollar and bond yields both steadying at multi-month highs amid recession warnings, new geopolitics tensions and continued bargain hunting in bullion from China, writes Atsuko Whitehouse at BullionVault. Spot gold prices edged higher to $1,812 per ounce after dropping earlier to a two-month low at $1,806. The dollar price of gold has now lost 7.6% since the 9-month high of $1,959 reached at start February, the day after the U.S. Federal Reserve raised its key interest rate for the 8th meeting in a row and said that it doesn't foresee cutting rates in 2023. A higher for longer Fed is playing out in lower for longer precious pricing, says Nikki Shields, head of metal strategy at Swiss refining and bullion finance group MKS PAMP, pointing to the US dollar's continued rally after the Fed's preferred inflation indicator, the core PCE price index, came in higher than expected. The dollar index, a measure of the U.S. currency's value versus its major peers, today edged lower after jumping 0.6% to hit a 3-month. But at $1,800, physical floors and underpriced escalating geopolitics and a hard landing risks should see gold find a bottom, Shields says. Gold prices on the Shanghai Gold Exchange continued to show a historic premium to London on Monday, suggesting strong demand in the precious metals' #1 consumer nation by offering $35 per ounce to new imports, more than 4 times the typical incentive. In 2022, the Shanghai Gold Premium averaged $11 per ounce on data compiled by BullionVault, up from $5 in 2021 and reversing an average discount of $26 seen on 2020's strict COVID lockdowns. Gold demand in China is expected to remain strong over the coming weeks as investors look for safe haven assets amid the geopolitics tension, Reuters quotes one regional bullion executive. After the Chinese spy balloon incidents and a growing ban on TikTok, the Chinese social media app, from U.S. government devices and university campuses, US-China tensions deepened at the weekend when after Beijing refused to join the rest of the G20 group of nations in condemning Russia on the first anniversary of its invasion of Ukraine. Sending military aid to Russia at this time would be a bad mistake, said U.S. National Security Advisor Jake Sullivan on Sunday, repeating last week's warning from Secretary of State Antony Blinken and saying China should want no part of it. On the economic front, meantime, the Cleveland Fed's measure of U.S. recession probabilities now sees a 62.7% chance of a downturn by February 2024, and the New York Fed's measure, also derived from the deeply inverted U.S. yield curve, now puts the odds at 57.1%, up 10 points from its last reading. The MSCI All World Index of Global Shares rallied by 0.3% ahead of the U.S. opening on Monday after posting its steepest weekly decline since September and losing over 5% from early February's 6-month high. The fact that gold is still holding $1,800 despite such a strong dollar and high interest rates may be partly because of physical bargain hunting in China, and perhaps also central bank buying, says Bruce Ikemitsu, Chief Director of the Japan Bullion Market Association, in his latest note. Gold priced in euros today edged lower to €1,716 while the UK gold price in pounds per ounce fell 0.5% to £1,509 as sterling strengthened on the FX market on news that the British government is on the cusp of securing a new Brexit deal with the European Union over trading arrangements for Northern Ireland.